In order to beat the market maker, you have to trade in line with them. And one of the ways you can beat the market maker is by trading the Asian session liquidity. The Asian session liquidity are liquidity areas located at the top and at the bottom of the Asian range. And these liquidity areas are usually exploited by the market makers during the London session. The market makers forces traders to take trades in one direction while going in the opposite direction for the day, leaving traders stuck in drawdown, in losses, and eventually blown accounts. So in this video, I'm going to be showing you how to trade in line with the market makers using the Asian session range and doing exactly what the market makers are doing, which is going against the retail traders. If that sounds interesting to you, let's hop into the video. Awesome. So now that we are on the charts, I'm going to be showing you first of all how the strategy works, how the pattern we're going to be looking for, and I'm going to be showing you a couple of examples from last week. It's going to be like a back testing session, and I'm going to be showing you the types of trades I'm going to be taking last week from Monday to Friday last week, and let's get into it. So first of all, the Asian session liquidity, you have a box like this, which is the Asian session. So when you're looking at my chart, you see a gray box. I'm not going to be breaking this down as in-depth as before. I've done a video on that, so if you want to watch that and check that out, be sure to check the video after this one. It will be on the end screen at the end of the video, so pay attention. First of all, you're going to have a consolidation during the Asian session. Now, the consolidation sometimes is not usually clear, but most of the time it will be clear, but sometimes you might just have a huge move like this. But what is important is the Asian session box, right? So this box is out the whole Asian session, and it lasts for about 8 hours. Now, what you're going to be looking for is you're going to be looking for either buys or sells. So how you're going to be looking for buys or sells is if the market breaks to the upside, because there's going to be liquidity here and there's going to be liquidity here. So this is the top and the bottom of the Asian range. So now you're going to be expecting, if the market breaks to the upside, you're going to be looking for an M formation to take this back down. And if the market breaks to the downside first, you're going to be looking for a W formation to take this back up. Now, why does this work? This works because there's this strategy, very popular strategy out there on the YouTube space, on the Forex industry space, where people usually take breakouts of the Asian session. They call it the London breakout strategy. People usually take the breakouts out of this Asian session box, right? So they'll be taking buys here and they'll be taking sells here. So now the majority of people are going to be taking buys and sells here. It's a very popular strategy. Some people even use limit orders and just put buy stops up here, sell stops down here. So if they're not on the chart, the market will just go and hit their activate their orders and then put them in the trading breakout. But little do they know that the market makers usually manipulate these areas. So there are going to be people selling here at the resistance and buying at the support. So there's a lot of action going in just this consolidation. So when you have the breakout like this, you're going to be looking for sales and you're going to be looking for buys. So this is the pattern we're going to be looking for basically in the charts. So now I have a couple of pairs here that I'm going to be looking at. 1, 2, 3, 4, 5, 6. So 6 pairs. I'm not going to be looking at the rest because of time. So I don't want this video to be too long. So I'm going to be looking at GBP USD first. And we're going to be looking at a couple of trades using that pattern that I showed you for last week. So we're going to be looking from Monday to Friday. So here we have the week. I have a weekly separator. So you see this vertical blue line. It separates each week from the other. So that's how I know one week from the other. And then the vertical lines you're seeing on the charts, with these black vertical dotted lines, separates one day from the other. So this is Monday, Tuesday, Wednesday, Thursday, and Friday. And today is Monday. So first of all, we're going to be looking at Monday on GBP USD. What are we looking at? We see that the market has been in a downtrend, right? So basically, if you're looking for sells here to continue this downtrend, then you're going to be looking for this. If you're looking for sells, then you're going to be looking for the market to break out of the box to the upside and give you an M formation. And then if you're looking for buys, you're going to be looking for the market to break to the downside and then give you a W formation. So that's how it works. So if you're looking for sells on GBP USD, then this would have been your sell here. So you can see that this is the Asian session box, the gray box, and then you can see that the market breaks first to the downside. Remember, there's liquidity at the upside and there's liquidity at the downside. So now the market breaks to the downside, takes out liquidity. Breakout traders buy, sell here, sell all the way in here. And then the market goes back up and takes out the liquidity at the top side and gives us this M formation. Now, there are two ways you could have entered this. If you didn't enter here on the second leg of this M formation, this is where I would usually enter, but there are several ways of entering this. So you entered here and you went for about 30 pips or even 50 pips, you would have gotten your 50 pips from this, just entering on the second leg. If you can't see the M formation here, then just change it to a line chart and you see the M formation plain as day. So you either enter on the second leg, or if you're more conservative, then you can wait for a break and retest from the neckline of the M formation. This is more like ICT. So you get something like this, and you get like a break of structure on the market. I don't know what they call it. I think they call it break and retest, yeah. And then you wait for the market to come back down like this, and then you continue down. Or is it mitigation or something like that? I can't remember the terms. There are a lot of terms in the small money concept space. So if you were trading like that, then you would enter here on the break and retest, probably put your stop loss up there, and you would have cut not really 50 pips, but maybe like 30, 38 pips or something like that, right? Depending on your stop loss, your risk to reward would be 1 to 6. Now looking at the next day, which is Wednesday. Monday we didn't have anything. Tuesday, if you took that, I didn't take that personally. So I was looking for buys to reverse this trend. There are certain reasons why I would have wanted to reverse this trend, because of, you see, 1, 2, 3. If you've watched my previous videos, you will know why I'll be looking for a reversal. So this is basically the low of the week here. I'm not going to be going in depth on that. So this is the low of the week. It's significant. So we see this W formation here. Why you might see this W formation and say, well, what happened to this one? The problem with this W formation here is that the timing is wrong. The timing is not right. So London session hasn't opened yet. London session opens at 8 o'clock my time. So as you can see here, it opens at 8:30 my time, not 8 o'clock. So this is 8 o'clock. So 8:30, this is London session right here. So it's best to wait for London session to look for this pattern. So if you had waited for London session, then your patience would have paid off. So this is your W formation here. You enter on the second leg. This is I don't even need to go to the line chart to look at this. This is a very clean W formation. Even a blind person can see it. And then if you took this up, you would have got, if you went for 50 pips, that would have been easy. If you went for maybe the high of the high of the day, or the high of the Asian range, which most likely there's going to be liquidity there too, you can use that as your target. If you went for that as your target, then you would have got a 1 to 5. Depending on your stop loss, you'd have got a 1 to 5 on this. All right, so that's about 60 pips. The next day, what do we have? The market comes to the downside, and I actually took a loss on this because I was still looking for buys since I got this reversal here. Right, so I was looking for buys, the same pattern, right? So I got a W formation here, and this one didn't really play out. It's lasted for about 1 hour 45 minutes. On the 2-hour mark, it came back and hit my stop loss. Right, so this is a loss. Right, so we have how many wins on this pair? So we have 1 win here. Let me just put that back in. So we have 1 win here. If you took this, you have 1 win here, another win here. So that's 2 wins right now and 1 loss, right? On Friday, we didn't really have anything here. I was looking for buys, so I didn't really take anything here. If I had gotten maybe something like this, I would have taken it back up, but there was nothing there. So on GBP/USD, we have 2 wins and 1 loss. With a simple 1 to 2 risk to reward on this one, you would have been up. If you're risking 1% on this for 1 to 2 risk to reward, you would have been up 3% for the week on this. Right, so on USD card, what do we have here? We have on Monday, which is here, this is Monday. So we see that the market has been going up, and all of a sudden the market came to the downside. I wasn't looking to take any W formations here because it will be invalid, because the market has been going up for certain amounts of days or levels. Now the market comes to the downside, right? So I'm looking for sales. We have this breakout here, but we didn't really get a W formation on second leg. So this was a pass for me. I didn't take this. You can take this mainly because of it's coming out of, it's just reversing. It's possible to take this first leg, but it's recommended to take the second leg, right? Some people might say, this is an order block here, blah, 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 and you enter here, something like that. I don't really trade order blocks, so I have no idea how that works. All right, so Monday, nothing. Tuesday, nothing. Wednesday, nothing. If this had come up here, that would have been better. Wednesday, nothing. Thursday, I had a trade here. Yeah, I took a sell somewhere in here on this M formation, and then this is the main entry, right? So this is the high of the day. You can see the M like this, and then I took it, but I scratched out at break even because the market just stalled for about 2 hours, and I don't really hold my trades more than 2 hours if it's not in profit, right? So this was a break even trade for me. So let's see. On Friday, what do we have? This is beautiful. I missed this one. I didn't actually take this one. I took it first here, then I scratched out at the break even, and then I didn't take it again. I would have taken it here on New York session open. So this would have been a very beautiful trade if you took your entry here, zero drawdown, straight up to the liquidity zone here. So that would have been 35 or maybe 40 pips on this. This is a beautiful W formation, or 3 hits, or triple bottom, I think. So we have a double bottom, and then this is an extra leg, so that's a triple bottom, and that is it on USD CAD. So this is 1-0, no losses, 1 win. And then I don't think I'm gonna be able to finish the pairs. Let's just see how it goes, because I think this video is getting long already. So Euro CAD was absolutely beautiful on just one occasion. So here we have the reversal. The market reverses from here on Friday, so we're going to be looking for sells. So the market goes down here, 1, 2. I'm still looking for sells. Coming in on Tuesday. Monday, I won't be taking any W here because of they just reverse from here, so I'm looking for sells. I think some people might call it break of structure or stuff like that. And then coming into here, we have this consolidation here. This is the Asian session range. The market goes to the upside, gives you this beautiful W formation here. This, you can't see a W formation more beautiful than this. You enter here, sniper entry at the highs. The stop loss can be above any amount of pips. If you went for 50 pips, you would have cut this. Any amount you went for this would have been good, but overall the market went for about 70-80 pips on this. So out of that 70 pip range, maybe you can catch like 30, 40, 50, 60, or even maybe the 70 if you're that's good. All right, so on Tuesday, that's what we have there. On Wednesday, nothing really. We didn't get, just like USD CAD, we didn't get a second leg. So this Euro CAD and USD CAD basically did the same thing, just like this. All right. So on Thursday, I was actually looking for buys because we have 1, 2, and 3. So I was looking for buys down here at the lows. And what basically happened is I took this on a buy here. And it went and hit my stop loss. That's 2 wins. That's 1 win and 1 loss on this pair. I was looking for the same buys here on GBP, on EuroCAD, expecting the market to go to this downside and then maybe give me a second leg or first leg. I'll take any one back up. All right, so this is 1 win and 1 loss, right? Yeah, one win, 1 loss. GBP CAD, this was absolutely beautiful. Now this one, we see that the market is in a downtrend, right? The market gives us a triple top here. So this is the first top, M formation, double top, triple top, market reverses. Now Monday, same buyers with EuroCAD. Now what do we have here on Tuesday? We didn't have anything here on Monday. Here on Tuesday, what do we have? We have this M formation where at the high of the Asian range. If we took this here, no, my entry would be here basically because of the candlestick pattern that is here. If you can spot what that candlestick pattern is, then good for you. But there's a candlestick pattern there, but that's more like an aggressive entry. A better entry, a more confirmed entry will be this one. So let's just stick with this one for now. All right, so this would be, if you went for 50 pips, this went for about 90 pips. So anyway, in that range of 90 pips, if you caught any of that, that would be good. DBB card, I didn't take this one, I missed it. This was W formation here, like this. Very beautiful W formation, and my entry would have been here. I didn't see this when it happened. I only saw it when it had already happened, so I missed this one. This would have been probably like a quick scalp, 30 pips, 35 pips. Yeah, so on Friday, Thursday, we didn't have anything. On Friday, this was absolutely beautiful. I sent this to my Telegram channel, link in the description. I sent this. I basically said that the market was gonna go to wherever the zones I drew out. I think this was one zone I drew out, and then this was the second zone, I think. Yeah. So I said the market was going to go to these two areas. So I we basically bought somewhere here, stop loss below, about 5 pips below, and then I held this all the way up here. Some people might have closed here. This was the first target, second target, right? So if you close at the first target, that was good. If you close at the second target, that was even better. But the market still went for about 120 pips. All right, so I was able to catch about 70 pips from that. You can't really catch the whole move most of the time because you don't really know where the market's going to reverse from. They could have easily just done like this and then ended the day here, but they decided, I think news came out, so they just went up there, right? And even today we can even see something like that, W formation now here, but the timing is bad. And then GBP CHF, what do we have on GBP CHF? Let's see. We have the previous week, we see this M formation on the highs here. You can see that clearly. And then the market reverses. So I'm looking for sales. I can also take buys. It's not bad to take buys. After like, once you get like 2 days of drop, you can take buys because the market can reverse anytime. All right, so this is a more complex pattern. It's like a multi-day W formation here. All right, so this is the first leg, the second leg, and this takes 2 days. First day, second day, right? So what happened here is the market came to the previous day's low, gave us a W formation, but if you were to enter this would be the first. You can, if you entered on the first leg on the intraday pattern, your stop loss might have gotten hit, but I usually put my stop loss 5 pips below the low. So let's see if the stop loss would have been hit. So this was the low, 14 pips, 5 pips, that would be 19 pips, right? So the market barely missed the stop loss. That would be 19 pips, somewhere like here, right? So the market barely missed the stop loss. If you had gone for here, that would have been for 35 pips. If you had gone for maybe the previous day's high, there's a liquidity there too, that would have been 460 pips, right? So any entry here in this area was good before they shifted the zone out. Even after they shifted the zone, there's still an entry there using ICT. I think that's the break and retest, right? So if this is your break of structure, the market comes back to retest this zone. You can see this rejection here. I'm not really an expert in ICT, but I know some of these concepts. So you can enter here, or you can enter maybe here on this and take it up. Stop loss might be down here or down here, right? So let's see, that was Wednesday. Thursday, I took this buys here on this W formation. And let's see, what was my entry? My entry was somewhere here, or I can't remember. Okay, no. My entry was here. Yeah, my entry was here. After all this mess here, I just took the entry here and then it went up. My stop loss was 5 pips below the low. This would have been a win. So that's basically 2 wins here, like this, 2 days in a row. Friday, we didn't really get anything. So here on GBP card, that is 2 wins and 0 losses for the week. And then the last pair, this one was beautiful. I love this one. This one, you see the market has been going up for a lot of days. I can't even count it. Let's see. 1, 2, 3, 4, 5. For 5 days, market has been trending to the upside. And I know that after 3 to 5 days, the market tends to reverse. So this was the high of the previous day. This is a more complex pattern, just like GBP card. So this is the first leg and this is the second leg, right? And you can see both of them are outside the Asian range. And then this one also goes outside the Asian range, goes to the high, gives us this star formation here. And I basically entered the trade because I know that this is the reason why you can enter the first leg on the multi-day M formation like this is because this is already the second leg of a larger structure. So you don't need to wait for another second leg. This is already the second leg, right? If you look at this on a 1 hour, this is already the second leg of the pattern, so you can enter here. The only way the only way you can't enter a second leg is if you just have something like this. There's no structure to the left of you. If there's structure to the left of you like this, then you can take this, because that's basically the M formation, the W formation, right? So I entered here. My stop loss was 5 pips above this, so that would be 24, and I went for a 1 to 2 risk reward. That's about 50 pips on this one. All right, so it was very sweet trade. This was news, right? So that's one win here, right? 1-0. That was the only trade that showed up on CAD-JPY. So let's count the amount of wins and losses for the week. So we start from GBP USD. Let's see. GBP USD, that is 2 wins and 1 loss, right? So 2 wins, 1 loss. And then GBP CAD, that was 1 win. So that's a total of 3 wins and 1 loss for now. And then let's go to Euro CAD. 1 wins and 1 loss. So that's 3 wins and that is 4 wins right now and 2 losses. Let's go to GBP CAD. What do we have here? 2 extra 3 wins basically. So that is 4, 5, 6 wins and 2 losses at the moment, right? Yeah, 6 wins and oh no, my math was wrong there. Sorry about that. My math was wrong there. So this is 4 wins, right? 4 wins and 2 losses. So on GBP CAD, we now have 1, 2, 3. 4 plus 3, that is 7. So we have so that would be 7 wins and 2 losses. Let's see on GBP CHF, 2 extra wins, so that would be 9 wins and 2 losses at the moment. And then plus what's it called, GPY, so that would be 10 wins and 2 losses, right? If you took all those trades all together, what do we have? Yeah, let's say you took on let's say it's a 1 to 2 risk reward on those wins, right? So you have if you took 1% on this trade, then that means you would have 20% minus 2%, which is your losses, and you would be up for the week 18%, right? That would be 18% if you took all those trades. Now, realistically, you wouldn't be able to take all the trades, but even if you cut out of these 10 trades, even if you cut 5 or 4, you'll still be up, because only 4 trades and 2 losses. As your 4 trades will be times 2 if that's a 1 to 2 risk to reward. That, so you'll be up 8 minus 2%. So total, you'll be, if you cut only 4 trades, you'll be up about 6% for the week. That is pretty good. Times that by 4 months, and then you know what you're looking at, right? With a big, large account, maybe like a 50k, 100k, 200k accounts, 400k accounts, right? So that's basically how the strategy works. That's how you can beat the market maker. And if you want to learn more about the strategy, click the video on your screen. That shows you more in-depth knowledge and study and breakdown of how the strategy works. And then check out my other videos if you want to learn more. And I'll see you on the next one. Peace.